Why do the bankers don't want you using silver? Why don't they want the public to wake up to how convenient and how great silver is? Well, because when you use these, or if they bring in a CBDC, they profit from every transaction you make. They can keep track of what you're doing. They can tax you as well. The government can tax you. By now, I hope you understand that the governments and the bankers work together. But with these coins, it's all very private. And I think that's why they try to keep silver from shining out there, and they do it through price manipulation.
From an investment perspective, rising silver prices could undermine confidence in the US dollar. Thus, price suppression is attractive for central banks. Silver price manipulation involves coordinated efforts to keep silver prices artificially low, often by major banks like JPMorgan, UBS, and HSBC. This issue remains prominent in 2025 discussions around market fairness. MarioInnecco is a market commentator and advocate for sound money, renowned for weaving history and monetary insight. With a banker's eye and a historian's depth, Innecco decodes the modern financial system through the timeless lens of gold and silver. Concurrently, Innecco argues that calling silver merely an industrial metal is propaganda to hide its monetary role. But as people seek quality and authenticity, he believes silver's true value will reemerge. As of March 2025, it started outperforming gold in return percentage. Investors looking at gold versus silver returns would find silver giving higher returns and outperforming gold, especially during the bullish periods. Due to the low market capitalization of silver as compared to gold, silver is more responsive to market trends. In a striking observation, Innecco underscores silver's disruptive power to the financial status quo. He explains that bankers suppress silver through massive paper short positions on COMEX and LBMA to maintain control. The COMEX silver market is teetering on the edge of a potential default as traders warn of unprecedented naked shorting and price suppression. Experts predict a violent surge in silver prices, possibly triggered by Rule 589, a mechanism allowing silver to rise $15 per day for 10 consecutive days, while geopolitical tensions and tariff disruptions threaten to ignite a liquidity crisis. From a technical perspective, Innecco emphasizes silver's historic role as money, noting that in languages like French, Spanish, and Chinese, the word for silver also means money or bank. Before diving into MarioInnecco's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the markets. Let's get into it.
Why do the bankers hate silver so much? Why do they keep a huge paper short, not just via COMEX, but via the LBMA? Yes, they say that they're hedging the ETFs, but we all know that that's BS, right? We all know that what they try to do is try to keep the attention from the public away from silver. We have to go back to 1980 to see that silver actually threatened the whole monetary system. Paul Volcker had to basically, with the regulators, change the rules of the COMEX in order to crash silver. The Hunt brothers, they'd been accumulating physical silver since the early 70s. And it's interesting because now we have a billionaire who has been accumulating physical silver through the COMEX. David Bateman, I think his name is. I could be wrong. But yes, he's flying a bit under the radar. So why do the bankers hate silver? Well, because silver has been, the money of gentlemen, or the money of the people, for a millennium. The reason the bankers hate it is because it's out of their control. It's in your hands, and it's a great currency that circulates and holds its value over time. It's much better than these pieces of paper here, 20 pounds, 10 euros. And it's much better than using this plastic, in my opinion. And why do the bankers don't want you using silver? Why don't they want the public to wake up to how convenient and how great silver is? Well, because when you use these, or if they bring in a CBDC, they profit from every transaction you make. They can keep track of what you're doing. They can tax you as well. The government can tax you. by now I hope you understand that the governments and the bankers work together. But with these coins, it's all very private. And I think that's why they try to keep silver from shining out there. And they do it through price manipulation. They do it through propaganda. They talk about silver being only an industrial metal, even though in my eyes, silver is still money, just like gold. Gold is different. Gold is more of a wealth preservation currency, I would say, or money. It's something that you save, something a bit more valuable than silver, but it can also be used as currency, of course. If you buy a big ticket, high price item, you can use gold or you can use a lot of silver, but it's more convenient to use the gold. And it's that simple why they want to keep silver down. But I've been noticing that people are becoming more and more, how can I say, they want things that are of better quality now. I think it's the trend, the sentiment is changing. People, I think, are going to move away from wanting too much convenience. Of course, convenience is good, but it can be something that people, it can be too much of a good thing, I think. And what do I mean by that? I think people want beauty more and stuff. Yeah, they want to lead a life that's more not always rushing around. And I think, all these things that are great-grandfathers or grandfathers, great-great-grandfathers, the way they lived with the coinage like this is going to come back and it's going to shock the world.
In the interview, MarioInnecco passionately emphasizes that silver could be the last line of defense against the tyranny of CBDCs. Despite relentless suppression efforts from bankers, he remains committed to stacking silver and increasing his silver mining positions. During 2024, silver reached levels not seen in 12 years, approaching $35 per ounce at the beginning of the last quarter. This increase in demand was due to political uncertainty in the United States, with the presidential elections on the horizon, as well as growing geopolitical risks in the Middle East, particularly the possibility of a conflict between Israel and Iran. Some analysts are even more optimistic, predicting that silver could reach $50 per ounce in 2025. These forecasts reflect sustained optimism in the market, supported by the increasing adoption of green technologies and strong investment demand. In a broader look at market movements, Innecco outlines how U.S. equities saw modest gains after a temporary tariff exemption on tech imports, while global currencies and commodities showed mixed reactions. Notably, silver held its ground, displaying resilience despite ongoing suppression efforts by the banking sector. Let's get back to the interview.
If you really believe in the power of silver and the fact that we need to go back, in my opinion, to silver, it's the only thing that will save us from tyranny, the tyranny of the CBDC. And we're going to look at where the markets are this morning. It's 8:35 a.m. London time. So we've got spot gold at 32.32. It's down about $4. High's been 32.46. The low has been 32.08. Spot silver is at 32.23. It's now only down about 4 cents, but it's been as low as 31.80. Yes, the bankers are gonna fight till the death here with silver, and but I'm gonna keep stacking silver. I'm gonna also keep a hold of my silver miners or even increase my positions. So how's the stock market doing in terms of the response to Trump exempting mobile phones and computers from the tariffs, and then Lutnick, the Commerce Secretary, coming out, and even Trump came out as well, saying it's only temporary. I guess they don't want to lose face because it looks like Apple, is it Tim Cook, gave Besant a call and said, you got to stop this. Apple is going to get hurt. So, the stock market is higher, but not that much higher, I would say. It's not really going up as much as it did when they came out with a 90-day pause. We've got the Dow up less than 1%. 288. The NASDAQ 100 is up 1.5%. I guess that's understandable. And the S&P is up 1.2%. As far as the currencies go, they've rebounded a little bit here. The euro is up 0.25%. The pound up 1/3. The Swiss franc is pretty much unchanged. Someone asked me if I could cover also the other currencies, so we'll do that. The Aussie dollar, that's up 0.5% versus the dollar at 63.18. Let's look at the Kiwi dollar. Kiwi dollar is up almost 1% at 58.71. The Japanese yen, well, the dollar is down 0.5% versus the Japanese yen at 142.70. In terms of the commodities, general commodities, we've got WTI crude up 0.33% at 61.31. High-grade copper is up 0.75% at 4.60. Of course, recently we made all-time highs in copper. We've seen a correction, but I think we're going to go back up towards 5 eventually. And to finish off, let's quickly look at the bond market. 10-year treasury yield is down slightly, only 1.5 basis point at 4.48. What about in the UK? Well, the situation in the UK isn't any better. The 10-year yield is almost, well, it was up at 4.80 earlier. It's now 4.75. 30 years approaching, well, it's at 5.51.
As the most affordable of the precious metals, silver is a common choice for investors and first-time buyers looking for a reasonable entry point. With geopolitical tensions rising and economic uncertainty looming, silver's role as a safeguard against centralized control, especially through CBDCs, is gaining traction. Do you believe silver will reclaim its historic role as real money? And if so, how soon do you think the world will wake up to its true value? We would love to hear your thoughts. Drop them in the comments below. If this video gave you something to think about, show some love by liking and subscribing. Hit that bell icon so you're first in line when the next market-moving insight drops. Until next time, stay sharp and stay informed.